Welcome back to another Pro Ticker podcast. Ready to dive right in.
Always.
Today we're taking a deep dive into some pretty interesting stock market action.
Yeah.
Specifically the S&P 500's recent performance. We're working with a fresh Bloomberg analysis here.
Okay.
Buckle up.
Yeah.
Because this is where things get kind of interesting. We're looking at record highs, but the mood, well,
Not exactly celebrating.
not exactly a party.
Yeah.
You know, the S&P 500 is on track for its longest weekly winning streak this year, like 6 weeks in a row.
Yeah.
And this is happening against a backdrop of record highs that we've seen throughout 2024.
Yeah.
So, you know, help me understand this. Why would investors be, I don't know, popping champagne?
You've hit on a fascinating contradiction.
Right.
Because you see a 6-week winning streak, especially after the year we've had, it's like a beacon in the night, right?
Okay. Yeah.
It suggests a shift, a change in the winds. But those winds have been whipping back and forth all year, right? Remember those dark days back in, well, you get the picture.
Yeah.
Volatility has been the name of the game.
For sure.
And that makes this streak stand out even more.
Okay, so you're really drawing me in with this turbulent year talk.
Yeah.
Bloomberg pointed to a few big players that might be causing some of these swings, like the Fed, global uncertainty, the U.S. election.
Yeah.
Can you kind of break it down for us? Like, what are we really looking at here?
Yeah, sure. Let's start with the Fed, right?
Okay.
Their every move on interest rates sends these ripples, or should I say tidal waves,
Right.
through the market. Higher rates,
Yeah.
investors get skittish.
Makes sense.
Lower rates, they loosen their grip on their wallets. It's a delicate dance.
Yeah, for sure.
And then you layer on the geopolitical uncertainty.
Oh, yeah.
Remember those tensions flaring up in the Middle East earlier this year?
Right. Yeah.
Big question mark.
That kind of instability always makes investors nervous.
Yeah.
And those nerves,
Yeah.
they translate into market jitters.
Yeah.
I see. Okay, so that's what we mean by geopolitical. Got it.
There it is.
But let's talk about this election business a little bit.
Yeah.
Bloomberg mentioned that investor optimism is back, but historically that might not actually be a good sign. And
Yeah.
you've got my attention.
Yeah.
What gives? Why is that?
You're picking up on a really, really crucial point. See, Ned Davis Research, they've been crunching the numbers, and they found this pretty intriguing pattern when investor sentiment gets all rosy in an election year,
Okay.
especially this close to the actual election,
Yeah.
the market tends to, well, fizzle out a bit. It's
Yeah.
like everyone's already spent their excitement before the main event.
Whoa. Hold on. So if everyone's feeling good now, does that mean we're in for like a post-election crash? Should I be hiding my wallet right now?
Don't panic just yet.
Okay.
It's not necessarily a crash, but historically we see a more muted market response post-election after a period of pre-election optimism. The opposite scenario, where things are looking a little bleak before the election,
Right.
is surprisingly more likely to result in a rally afterwards. Funny how that works, huh?
It really is counterintuitive. All right, so we've got this winning streak potentially being, dampened by pre-election jitters. What else is driving the market right now? Like I'm ready to kind of dive into those Bloomberg details.
Okay, well, the Bloomberg analysis actually dives into some sector-specific trends, and
Yeah.
one thing is very clear: big tech is still king.
Okay. No surprise there, right? Seems like every other day there's a new headline about a tech company breaking records.
Exactly. And this time is no different. We're seeing the Magnificent Seven, those tech giants we all know and love. They're absolutely crushing it.
Right.
Bloomberg Intelligence is even projecting something like an 18% profit surge for them in Q3.
18%. All right, come on. Now you're just rubbing it in for anyone who hasn't been investing in tech.
Well, it's hard to ignore those numbers, but here's the kicker. That 18% growth for the Magnificent Seven, it dwarfs the projected 1.8% rise for the rest of the S&P 500 index.
Oh, wow.
So it really shows you who's driving the bus right now.
Talk about a stark contrast. And speaking of those tech titans, the article mentioned Apple is having a field day with those new iPhone 16 sales, especially in China. Is this some kind of fluke, or are we seeing this kind of global demand across the board with other tech giants?
Apple's success is a perfect example of what we're seeing more broadly. tech companies they're incredibly well positioned to capitalize on the spending power of emerging markets, especially a massive one like China.
Yeah, for sure, for sure.
And it's not just about the big names either. Remember that TechCrunch article you shared about Nebius,
Yeah, yeah.
the AI company that recently
Yeah, they were navigating some pretty tricky geopolitical waters.
exactly. And despite those challenges, they're seeing success, proving that global demand for tech, particularly in areas like AI, is booming.
It's wild. Makes you wonder if Apple's supply chain can even keep up. But I digress. While it's easy to get caught up in the tech whirlwind, I did notice some intriguing developments outside that realm in the Bloomberg analysis. That whole activist investor situation with Lamb Weston caught my eye. The French fry giant, what's the deal there?
Ah, Lamb Weston. It's a perfect example of why we can't just look at broad sectors and assume everything's, rosy.
Yeah.
Even in a sector like food production, which you might think is relatively stable,
Right.
you have these underlying currents of investor sentiment and company specific challenges.
And it really highlights how much those micro level factors can impact a company's performance, even if the overall sector seems to be doing, relatively well.
Absolutely. And then on the flip side, you have a company like American Express, which is struggling a bit despite, strong consumer spending overall.
Huh.
It just goes to show there's always more to the story.
It's like those hidden levels in a video game. You think you figured it out, and then bam, something new pops up. So what you're saying is it's not enough to just, ride the wave of a hot sector. You're really saying we need to be scrutinizing companies like Lamb Weston and American Express even more closely now.
You hit the nail on the head. This deep dive has really driven home the importance of going beyond those surface level trends. We need to be asking what's happening on the ground with individual companies? What are their stories? What challenges are they facing? That's where you'll find the real insights.
I'm with you on that, but with so much information flying around, how can our listeners even begin to make sense of it all, let alone like make informed investment decisions?
Yeah, it can feel like you're trying to drink from a fire hose sometimes. It absolutely can, but that's where, taking a deep breath and really focusing on the fundamentals can be really grounding. We talked about the market's recent, hot streak, but remember those historical patterns, the election, it adds a layer of uncertainty. It's a marathon, not a sprint, as they say.
Right. Don't go betting the farm just because things are sunny right now. Noted. But what about those big tech companies that are, well, crushing it? Should we all be jumping on that bandwagon?
Look, their global reach and their constant innovation, it makes them attractive, no doubt. But here's the thing, diversification is key. It's like that old saying, don't put all your eggs in one basket.
Right. Even if that basket is labeled tech.
Exactly.
Spread the love,
Yeah.
so to speak. And those examples we discussed, Lamb Weston, American Express, they really highlight that,
Yeah.
Individual company performance, it's its own beast.
Exactly. A rising tide might lift all boats, but some boats are better built for choppy waters. And look, Bloomberg even hinted that earnings growth for non-tech companies might actually accelerate in early 2025. Imagine what that could mean if tech's dominance starts to level out.
Ooh, that is something to ponder.
Yeah.
So much for tech being the only game in town.
Right. There's always more to uncover. That's what makes investing so intriguing, don't you think?
Absolutely. It's like we've peeled back a few layers of the onion today, but
Yeah.
there's always, more to explore.
Yeah.
We went from that bird's eye view of the S&P 500, zoomed in on big tech's influence,
Yeah.
and then explored those specific company stories.
And through it all, I think the message is clear. Informed decisions come from informed insights. We can't just rely on headlines or follow the herd. A little bit of digging can go a long way.
You said it better than I could. So to our listeners out there, whether you're, managing a portfolio or just starting to learn about investing, what are some final words of wisdom you'd leave them with?
Stay curious, question everything. Don't be afraid to challenge your assumptions, and most importantly, never stop learning. This deep dive was just a taste, a starting point. There's a whole world of information out there waiting to be explored.
That's what I love about these deep dives. Always something new to discover. So to our listeners, have you spotted similar trends in your own portfolios? Are there companies we talked about today that have piqued your interest? We'd love to hear your thoughts. That's all the time we have for today's deep dive into the stock market. But remember, the learning never stops. Keep exploring, keep asking questions, and we'll catch you next time on Pro Ticker Podcast.